If you could fire the mid-cap index for the day gone by so far, the BSE mid-cap and the BSE small-cap indices are actually reversing bulk of the weakness seen in the first half of the trading session. And that's why I was telling Anisha, depends on where you're looking. The entire weakness has been bought into. The small-cap is breaking into the green, and so is mid-cap. If you talk about the bank Nifty, that made the highest point in the first half hour of trade. Fair point, and no attempt of recovery so far. But look at what the Nifty is doing thanks to pharma names. There are very good moves coming in some of the underperforming PSUs so far. Look at how EIL has moved up. And then who can forget the stock, forget me not kind of stock. Every time there's bad news and stock falls, it comes back to remind you that, I'm talking about Z Entertainment. There's a lot of entertainment which has happened on that stock for the last series, but it appears that it has absorbed all the weakness and is back at 290. So it depends on where you're looking, but yes, the volumes are still not really picked up. The last hour trade yesterday fell on weakness, had set in on low volumes. Today also, a whole lot of massive participation is not there. So it appears like a dull day. Kunal and Nooresh both are also giving us company on this afternoon. Kunal, how would you rate? Because Shibani Sircar is also there on fundamentals. Good afternoon to you as well, Shibani. So, gentlemen, I was talking to a couple of people, professional, big traders. This kind of a weakness in Nifty and Bank Nifty is emboldening the bears a bit. That's the sense which I got. Some are trying to open up some fresh shots. Will it be worthwhile in your view? Kunal, let's start with you on Bank Nifty and Nifty, or this dip actually should be bought into?
No, so I think the dip should probably accelerate, not accelerate, but extend for the next couple of days. Okay. Now there is a very significant change of data point which has happened today, which we've not seen over the last 1.5 odd month specifically, and that is emergence of call writers. So as you say that there has been good confidence which has been brewing into the the bears as such. Today, for example, 48,000 strike on the Bank Nifty and 21,700 and 21,800 both cumulatively have seen one of the highest amount of call writing for themselves. We are talking of a weekly expiry which is tomorrow for the Bank Nifty and day after tomorrow for the Nifty. So that indicates that for the next couple of days, traders have started to get into a belief that maybe the indices may not break past about these two hurdles. So 48,000 on the Bank Nifty as well as 21,750, 800 on the Nifty. So I think I would probably be looking out for the next 2 days where the indices may consolidate a bit, but chances of the index breaking out on the upside in the next 2 trading sessions is very low.
Okay, so you're making a case that it may drift lower.
Yes.
Not a massive fall.
Not a major correction.
Major correction, but it may drift lower. Anisha?
Yeah, let's see whether it happens or not, but there is definitely some weakness and there is no, a very strong buying interest right now. People are on the sidelines. But I want to bring in Nooresh into the conversation as well. And Nooresh, I wanted to specifically talk about a couple of these big buzzers right now. A couple of the gas companies are actually moving higher. Gujarat Gas, yesterday we explained to our viewers how the propane prices, hiking is a good news coming in for Gujarat Gas as well, given the fact that the competition weakens. We should perhaps pull up the intraday chart of Gujarat Gas because that continues the move today. And the other one I want to talk about is Aditya Birla Fashion. Heavy volumes, suddenly a 7 to 8% move. And if I remember it right, in the last 1.5 months, the stock hadn't done much.
So starting off with Gujarat Gas, the stock corrected all the way from 800 is where it topped out in 2021 down to 400. So it was a 50% drop across Gujarat Gas as well as IGL and other names. Then it again made a bounce back to 530, 540 levels. Again, we are back at 400 3 months back. So a classical double bottom is done out here and we have created a strong base. And now going forward, it could retest those 530, 550 levels, which has been a resistance for the last 1 year. So positive on the stock, but a buy on dips at current levels, the risk reward is not great. Then going into Aditya Birla Fashion Retail, that's been a disappointing stock in terms of the way the price action has been for a long time. Even for the last almost 8 to 10 months, it's been in a very tight range, 200 on the downside, 245 on the upside. We've come very close to the breakout points. So we would wait for, say, a couple of days more because it's been a sudden 1 day spike today with very huge volumes. Could see some bit of a fade off tomorrow, and that's the time one could look to enter around the 235 to 240 mark.
Shibani, it was almost like in the last week of December, everybody was on the channel almost and in our circle, in our conversations was coming back and talking about, oh, let January come and then you see how FI flows will come back, etc. As if like clockwork, FI flows from 1st of Jan onwards, there's a rule that FI flows will start becoming healthier into emerging markets like India. Yes, DM, the dollar index has fallen. Yes, the acceleration in flows have been seen last few weeks, but it doesn't happen like clockwork, right? If they have to come, they'll come with their own ease and not exactly 1st of Jan, 2nd of Jan. Every day there has to be a buy figure from FI side. So expectation of this sort perhaps were misplaced, no?
Is that question for me?
Yeah, that's correct, Shibani.
Okay. Hi. Good afternoon. So yes, so as you are rightly pointing out, it's not that it works on a particular date or a time in terms of a clockwork sort of a reaction. But however, when you look at the flows that we have been getting, especially where India is standing out in a relative context to the emerging market pack, given the fact that our macro as well as our earnings growth trajectory, both at an absolute as well as relative basis, has been extremely strong. So if you look at the year 2023, I think for me, the standout feature was the fact that unlike many years in the past where we saw earnings downgrades, earnings actually got upgraded. And therefore, when you look at India's valuations in context to return ratios as well as earnings growth in the entire emerging market pack, India clearly stands out. However, for an FII or for anyone investing into India, they look at India in the global context and therefore valuations do play a role. And in that context, when you look at India's valuations on a relative basis, India continues to remain expensive. However, our belief is that given India's performance on the earnings side as well as macro stability as well as growth, valuations will typically always be at a premium, and therefore we should look at India more on a peg basis rather than just a PE basis. And therefore, we do believe that India still remains fairly favorable in the emerging market context. Globally, if interest rates come down, that's also favorable for the emerging market pack as well. And therefore, from that perspective, India continues to remain fairly impressive in the relative EM pack.
I want to scratch that point further, Shibani. Hi, Anisha this side. So,
Hi.
yes, the market move has been in tandem with the kind of earnings upgrade that we have seen as well. But the question is the pace of upgrades going to slow down materially, and perhaps the cycle would reverse in the sense that there might be some downgrades that might start? And I ask that question because the early commentary that we've got from the FMCG players or the IT players or even autos for that matter is not showing that amount of strength right now. Do you think at the end of the Q3, because we are right now at the cusp of the Q3 earnings season, there might be more downgrades than upgrades?
No, so we are not expecting to see any major earnings downgrades. But if you look at the first half of the year in terms of earnings, first half of the year has been extremely strong. And from that pace, you might see some amount of slowdown on a quarterly basis. However, we do not expect to see major earnings downgrades. And if you look into the next year as such, which is FY25, earnings expectations continue to remain fairly healthy in the mid to high teens, which is again supporting Indian markets and valuations. I think what we need to watch out for is one, so far earnings has been predominantly led by domestic businesses, which are still holding up well. The second sector, which has also been a key contributor to earnings, has been the banking sector. Here, incrementally, you are seeing some degree of margin pressure, and therefore you need to moderate earnings from that perspective. But banking still will continue to remain one of the large contributors to the overall profit pool if you look at the markets. And the third aspect that we need to watch out for is, unlike the previous year, which is FY22, FY23, FY24 has seen more broad-based earnings trajectory, so more sectors contributing to the overall earnings pie. So at this point in time, given the fact that the outlook on earnings remains fairly intact, we don't expect to see major earnings downgrades for 24. Of course, we'll have to wait and watch and see commentary going into FY25. Especially where consumption, discretionary consumption goes, and IT. So these could be two large spaces where you can see some, improvement going into FY25, and that could help support earnings as well.
Point taken. Time now to take a short break on the show, but before we do that, let's pull up the intraday chart of a few of these tobacco companies. VST Tillers, that's sitting on a upper circuit, 20% higher. Godfrey Phillips was the other one that was perking up during, not VST Tillers, I'm talking about VST Industries if I misspoke, because that stock is logged in upper circuit. We should pull that up. You also have Godfrey Phillips, which is high around 4 to 5%, and I think even ITC is now showing signs of breaking out. So let's watch for that one. Not sure if something specific is happening, or maybe just no news ahead of budget is a good peg.
Well, you know, the only thing common between the three is cigarettes, right?
That's what I said, the tobacco industry.
Yeah, but you know, there's a big block which has happened in VST Industries. It will be interesting to see who's participated. ITC is a different story. Godfrey is a one brand play. Which one is it?
I wouldn't know.
I don't remember right now. It's a one brand. I think triple.
Is that Gold Flake?
Marlboro.
Oh,
Yeah.
Marlboro,
PCR.
okay.
Somebody just messaged me. Okay, so let's take a short break on that note. Come back and more stock specific analysis on the other side.